The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I'm going to start out today's program by working with the material that Arch Crawford gave us yesterday on the show. I had several people ask me about it afterwards because they didn't quite understand what he was saying about the solar eclipse cycle to the lunar eclipse cycle. And basically, you know, we had the solar eclipse cycle on the 20th. That low is held, at least so far. And now we're looking at the lunar eclipse coming in to June the 4th. What Arch was talking about is we have a strong similarity in the pattern and the astro things that are occurring that what also occurred in 1987. And so I posted in to the Tiger TV the 1987 chart. And the high was made on August the 25th. That was known as harmonic convergence. That was 5 planets in the sign of Leo. They were all conjunctions of the major planets. It was just really a major thing. And we came down into September 26th of that year, and then we rallied into October 4th. That was the solar eclipse into the lunar eclipse. And then from there, we dropped, a great deal. And as a matter of fact, we dropped 16% on October the 19th of 1987. I'm going to go out on a limb here, and I'm going to say that if the market holds the low that we made on May the 20th, and we can go sideways to rally into the 4th of June, which is 5 trading days because we have a holiday on Monday, so we've got 5 trading days to go. If we can stay in a little uptrend or maybe even a strong uptrend, I'm not sure, but we'd like to have this going into a high on the lunar eclipse on Monday. I would think we'd want to be short coming into that day because I wouldn't want to miss it, but we'll have to wait and see. If the market closes really bad on the first of that Friday, the 1st of June, then I would say that you want to be short. But this is what's happened. I'm not saying the probabilities are, crashes only. That's why I don't use the word crash very much. But they don't happen very often. They happen about once every generation. We had one in 1987, so we're probably not due until another 20 years. I don't know, but we will have to. But the one before that was in 1929, which was pretty much a generation, and we're half of a generation through there. So maybe we'll see something like this. Maybe we'll just have a big increase in volatility. But in 1987, folks, the crash had some similarities, not just the solar eclipse to lunar eclipse, and not just the fact that, we had a high and then we're having a little bit of a rally back. We also had a situation in the currency market. Secretary James Baker was in Tokyo, and the whole thing started on a Sunday night. And that was on October the 18th. I happened to be in Beverly Hills. One of my friends who happened to be a market wizard and I had worked with before was getting married, and he and his wife were Jewish. It was an incredible ceremony at the Beverly Hills Hotel, and my daughter and I went to it, and it was a wonderful time. And around 10 o'clock at night, we were driving back, and we had no overnight markets or anything like that, back in 1987. But I happened to call a friend of mine in New York who was a currency trader, and he told me that the currencies were going absolutely crazy. The Swiss franc was up like 250 pips, and that was one of the bigger ones to trade. There was no euro at that time, and the Deutschmark was going nuts also. The dollar was getting trashed, and what happened was the crash right after that, and it was the scariest time that I have ever been in my 50 years of the market, and I was short. Stocks coming into that. I had options that expired on October the 16th, that Friday, and I was very happy because the Dow was down 106 points that day, and from a level of around 2,400, that was quite a bit, and so I was quite happy when the options expired. Had I had November options instead of October options, I would have made pretty close to 1,000 times more. But, that's neither here nor there. I don't know if this is going to happen, but if it sets up, what we want to look for is, because they have all these different ETFs, you can do the, doubles or triples or things like that. That's a good way to play it. And also we might want to look at a way out of the money option, something like 5%, totally out of the option, out of the money, and take a small flyer on something like that. Because if you're right and the scenario unfolds like this, it can work very well. But it's got to set up perfectly. If it doesn't, no big deal. But this is something that might happen. It's got a lot of similarities to 1987, both cyclically and technically and fundamentally. And this is what we will have to look at as we walk through this. Day by day as we look at it into this Monday. Now, something very important happened last night, folks. There were four major economic reports last night. The China Production Manager Index of some kind came out. It was absolutely horrible. The UK GDP number came out. It was absolutely horrible. The German confidence index came out. It was also horrible. And then the Eurobond meeting that was going on, the summit that was going on, was an absolute fiasco. Francois Hollande and Merkel could not even agree on who was going to sit in which chair. And so all this was happening at the same time. The markets were very, very active at around 4 o'clock in the morning New York time, and the Treasury notes went up and matched the high of the previous day. The GBL went up and made a higher high by just one tick. And our bonds, the 30-year bond, could not get any higher than the previous day's high. It didn't even take out the highs at 148.23. Now, if we can close below 147 today in the Treasury bond, the June bond, that would set up sort of a reversal. This would be the first time it retraced more than a 786 retracement off of any particular one. Now, I'm going to post into the Tiger TV the long-term chart going back 7 years and the German 10-year bond. That shows a beautiful three-drive pattern. It is perfectly symmetrical with the AB equals CD. If you get a chance, take a look at this, because this is true perfection when you're looking at a technical market. This is similar to what we're looking at with a 30-year bond, but we're going back and we're looking at over a 30-year period, but we're making the same type of pattern. The difference here is that the German bond is making a three-drive to a top pattern, whereas the 30-year bond 30-year U.S. bond is making a butterfly pattern. Now, the 10-year German bond had a record interest rate set last night when it made that higher high by just a little bit at 1.13%. In other words, they're loaning money at 1.13% over a 7-year period. I mean, this is, to me, absolutely, it just boggles my mind. And anyway, that's what's happening with this. And, we'll see, what's going to occur, with the rest of it. I want to post into the room one more time the long-term butterfly sell pattern that we're looking at. It is very, very close. We've hit 148.23. The notes have gone up and have actually made the number and have held there. We did not make a new high last night in the notes. And so that's giving us a little further description that possibly that, we are correct with this, and it's not going to, get any higher than, what we're looking at right now as far as the 148 and change level. But we will know more about it as we get through. The fact that the market could not take a really good really good news for the bonds and couldn't get them to move. Now they might go up today, and I could be completely wrong, which I am quite a bit. But at the time that it was happening, they should have absolutely been soaring, and that was not the case. And so this is what to me is important, is the fact that the market was not responding to incredibly good news. And when a market does that, it usually means that it's very, very tired. And that's the thing that I'm trying to keep an eye on. Now, There's really not much you can do as far as preparing yourself. If this scenario we're looking at for a market to come up into, she'll get back to the stock market for just a second because they are both related. But we will have more information on that's Thursday, the 31st when I do the show, because that will be my last show into that Monday. Monday will certainly have a good idea, but I think we want to be positioned, on the 31st or the 1st in order to, if this does unfold. And what we're looking for is the market to hold the May 20th low, and we had a pretty good rally yesterday. We went up, matched that rally high today, and then we backed off a little bit. The currencies have hit some major spots that they could have a little bit of a problem from, but right now we're just looking at it. Now, one of the things I'm going to cover all afternoon is this afternoon is we need to cover the softs, the cocoa, coffee, sugar, and cotton, just to show you folks, how bad these markets have really been hit. It's just been, if you take a look at some of these charts, it's beyond amazement. As a matter of fact, it's just at a spot where you think that when these prices were trading, where they were. What we'll do is we'll first look at the one that's got hit the most, and that is cotton. It made a high of $2.18 a pound back in February and March of 2011. It is now trading at 68% cheaper than that at 72 cents a pound. It's given up more than 80% of its whole move that it made from 2009. That's just an indicative of what happened, and this is we're seeing this all across the board in the commodities. Now we know that gold and silver hit really strong support yesterday. They had a pretty good bounce off of that, but these bounces only last a few days sometimes. So we must keep in mind that this is something that is also out there that could be very, very troublesome. And remember that in 2008, when these markets started down, the commodity markets, also gave them a lot of trouble because of the fact that there was margin call selling across all the hedge funds. And the hedge funds are having a difficult time as it is, just because of the fact that they're not getting influxes of money because people are they're not making any money usually over the last few years, and so that makes it to the point where it really is indicative of not new money coming in, and so if you don't get that, then the markets usually drift lower, in their own of their own weight, and that's what we're happening in so many of these. The grain markets have held up a little bit off of the major support at the Fibonacci numbers that we were looking at, and we'll take a look at that, of course, after the break. But we have weather in Kansas City and through the Midwest that sometimes is going to reach 107 degrees this weekend, and these grains should be going limit up, and they in fact are not doing that. And so when the markets don't respond to good news, that is telling you something. That means that there's no buying out there, or people are saying, we're not willing to take the risk at this spot. Okay, if you have any questions, it's 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, this is Larry Pesavento for the Futures Hour for TFNN. If you have any questions, it's 877-927-6648. And continuing on with the softs, I've posted into the room coffee, cocoa, and sugar, and you can see that they're in really strong downtrends. The only one that is holding up is the cocoa. It hit the major 786 retracement today at the $21 per pound level. I think it's per ton in that. I don't trade the softs very often. I'm not sure. I think it is $2,100 per ton. But, it's up a little bit, about $100 off the 786, so it's really, not moving very much. But coffee and sugar and cotton are in a disastrous bear market. I mean, they've been going down for, a long, long time. We have to keep in mind that the fact that, the gold and silver and even crude oil, if crude oil doesn't hold $88 a barrel, we're looking at some, real serious downtrends, in that market. And a lot of that is related to, what's happening with the U.S. dollar. Tom's been really bullish this since the, 73 to 75 level, and now we're approaching the 83 level. And we have some, serious spots up here to look at it, because when we get to 83 in the dollar index, we would be looking at a market that would be making a, very large 3-drive pattern along with the butterfly. And all of those would make it look, as a place for, where the dollar might react from. Now, that is probably related to where we are in the euro. This 125 level, the market bounced, just like a dead cat, last night. Not really much has happened, and it didn't, move too much. The pound hit the exact 618 on the daily basis at the 156.40 level. I think the low was 156.38, and it rallied a little more than 100 pips off of that low. So, some of these have held, but, you could come in some morning and, the game has changed and, there's no more euro and Greece or whatever it's going to be. But frankly, I don't really know or, I care because I don't want anybody to be damaged by it, but, we'll wait and see. We got a call from John. Are you there, John?
Good afternoon, Larry.
Hi, John. How are you today?
Pretty good, thanks. Yourself?
Very good, thank you.
Hey, Larry, I wanted to talk to you about corn, if I could.
Sure.
First, there's two corn contracts we could look at. One is July corn. That's at $5.92 presently. That's the old crop.
That's correct.
That is the corn that was grown last summer. That's still, still in the bins, used up as we speak. And then there's December corn, and that's the corn that's at $5.18, a full 7 under.
Yes, that's what they refer to as new crop corn.
Exactly, and that's the stuff being grown right now. And the much lower price on that new crop corn is attributable to the idea that 95 million acres of corn have been planted, and that assuming you get decent weather, you'll have surplus inventories and hence lower prices. Any case, so Dees corn, we rallied from $5 to $5.50 in the past 2 weeks, and we pulled back. My question: do you see a low risk buy anywhere in here on Dees corn?
Yes, today, because it's making a 61% retracement off of the, that move you just talked about. The low that it made, I'll put this into Tiger TV so everybody can see it. We made that low 2 weeks ago, right at the exact 61% retracement. I think it was during one of I think it was the commodity hour that day that we were hitting the low at $5. And that was equivalent where the July corn, is there. Both of these are in downtrends, but, we're getting a little bit of a bounce here. What's troubling to me, John, is the fact that we have ideal situations. Now, this is only May, so, this is not the real heavy part of the season, as far as drought or, crop scares. And you always get 2 or 3 crop scares. But this is just May, and we're having temperatures of over 100 degrees already, in Kansas and, parts of, Illinois and stuff. And so these markets, with this type of weather, the stress that it puts on the corn in a young stage like this, these things should be limit up. That's the way I look at it. And when it's not, it scares me a little bit. But, if you wanted to buy corn here at $5.19, your risk is about 12 to 15 cents a bushel. You can be a farmer for that without buying a tractor or hiring anybody. So stay with me, John, and we'll cover this a little bit more, okay?
Thanks, Larry.
Stay with us. We'll cover this after the commercial.
Very good. Thank you.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, John, are you still there?
I am, Larry.
Okay, we were talking about December corn here at the 519 area, which is a 61% retracement back. The only thing that scares me, John, is just what we talked about here, is the market is not responding, to the weather news. I mean, this is it's very ominous when the weather is that hot and you're not getting extreme moves. But this is still really early in the season. You're going to get 2 or 3 more. At least, crop scares. You'll get one that's related to rain. You'll get one probably related to drought, another one with too much heat.
Right.
But, the risk here is very small. You buy corn and, you become a farmer for, for about $600. You own, about 200 bushels of corn. So it's certainly, or 5,000 bushels of corn. So it gives you a, pretty good chance to be a farmer with very little outlay.
Hey, Larry, is there anything cycle-wise that you see in the corn chart cycle low by chance due in this time frame?
Well, the both wheat and corn react very, very strongly to the moon, and since we had the the solar eclipse, on the new moon, where it topped, on that weekend of the 20th. That's when the real hot weather hit, but that was the top of the market, and now we're looking at the lunar eclipse on the 4th. So that would be the next cycle that I would be looking at.
Gotcha. Say, let me just share with you and your listeners, Larry. In addition to the futures contracts traded on the CME, there is also an ETF, ticker symbol CORN, and that particular ETF is merely a wrapper around a portfolio of corn futures contracts. So people can look at that if they care, and in fact, I use this from time to time.
What was the symbol again, John?
CORN, corn.
Oh, corn.
Yeah, there you go.
Actually, somebody at the Merck had a creative thought, I guess.
Absolutely.
Yeah. Okay, that's great.
Right.
All right.
Good.
Well, thanks a lot,
Larry. Thank you. Have a good day.
You bet, my friend. Okay, I have to tell when I talk about these fundamental things. I've been in this business for a long time, and I've gone through all these crop scares, and I've always worried about how the markets react to the news. I had a life-changing experience in 1977. Actually, it was 1976. I had been long beans and oil and meal for well over a year, and the crop report came out in June, and it was so bullish that they said that the only beans that will be available at the end of the season would be in the Smithsonian. That was actually on a Reuters teletype. I wish I would have saved it because it was such a profound statement. And when I saw that, I had, for all of my customers and everything, I had well over 1,200 contracts between meal, oil, and beans spread out across every conceivable tradable month. And I immediately started to write the tickets for my broker. And when he came in, I said, look, put these in. And I put a stop in 2 cents or $100 under the previous night's close because they were due to be limit up for 5 days in a row. And let me explain to you what happened that day. They have a squawk box. That's where they get the CMB squawk box from. And this was from Cargill Grain. We were trading through Cargill Grain at the time. And the guy came on and he said, well, they'll be limit up 3 to 5 days, no problem. About a half hour before, he said, well, they're going to be up the limit in the nearbys at least 1 or 2 days, but in the far outs, the red months, the next year, he said there might be some trading close to limit up. And about 5 minutes before the market came on, he said, the market's going to actually trade a little bit. He said, they're not even going to be limit up. In about 1 minute before the market came in, he yelled, he said, oh my God, he said, they're only going to open up a few cents. And by the time they open up, 10 minutes after the opening, every single option of every single commodity of oil, meal, and beans were limit down, and they stayed there for 3 or 4 days. Limit down, limit down, limit down. And I got out. I was out in the first few minutes, and that was it. I quit. And a few months later, I went to work for Drexel Burnham. But that was a life-changing experience. All I did was use a little bit of common sense, saying, look, if this market can't go up with this kind of news, it ain't going up on any kind of news. Now, whether this is happening to the bond market or not, I don't know. But the bond market got hit with about the best news it could get last night. The euro was almost toast. In fact, they're pretty much, writing it off anyway, that, Greece is going to pull out of the euro and possibly Spain after that, but we don't know for sure. But this was big news. The fact that China's PMI came out was very bad. The UK GDP number was horrible. The German confidence index was really bad. And then this collapse of this euro bond talks that they're talking about was not very good either. And yet today the bonds are down, a full point. If we can get the bonds below 147 today in the move, then that's it. Now, I know some people, ask me, what's our profit objective on TBT? Folks, I just want this thing to get back to even. I know we're about 10 cents away. But frankly, the first thing we want to do is get it back into profitable mode. But I would be looking for a move. This is a major move, so we would be looking for at least a double or triple or quadruple, of the price of it. I know that's a little optimistic right now, but if the pattern is correct, that this butterfly pattern in the bonds and this 3-drive pattern in the 10-year German Bund is correct, this thing is, this is going to scare a lot of people, and not because of anything fundamental. It's a technical picture, but the fundamentals will be coming in right behind it if it's correct, because the news follows the trend, and that's what we're looking for. The gold and silver, I want to spend a little bit of time with that because it's very important, because I know a lot of you folks are involved in silver and gold, as am I, and as long as we can hold these lows that we made at that level of the 1522 level, it did hold that. We had some pretty important support, yesterday that held a little above the 786. The silver held, right at the spot, but this is what we're looking at. Today, all we've done is we've rallied to a 61% retracement of the move from, the 21st. That was a Sunday night when we got up to 1,600 in the gold before we had the big sell-off. So the main thing that we keep our mind on is if we go below 1522, all this is wrong. And, we are not going to be going higher in gold. We'll be going lower in gold. So this is, just as, common sense. You've got to, be able to look at it. Now, silver yesterday, stopped exactly at the 786 retracement on the downside. It hit the 61 for just a little bit at the 2750 level. It went down to the 2720 level per ounce. And then today, the rally back has been more than 786. Actually, it's exactly 786 of the move from the last Friday on the 18th. So that's still in a move. We need silver to get above 29 cents for it to resume its its bullish stance, but it's still got a possibility of being on the upside as a good spot to be moving. Now, I earlier in Tiger TV, I posted the weekly chart of soybeans that had made a triple top up there that we've been talking about for several weeks, and the beans also are coming down. I mean, beans are, they're still dropping. They're making lower lows, as we speak. That's indicative of a market that's made a pretty big top when this hot weather, is not giving it, any impetus to the upside. So there's another example of how the market responds to the news is what's important. We all know, let's go back and look at one of our favorite stocks, Apple. You remember when the Apple news came out that their earnings, the income was up 94%, and the stock had, made that Gartley down there at I forget what it was. No, that was before the Gartley. But anyway, it went from 555 all the way up to 620 in one day. It moved $60 per share. It stopped exactly at the 786. That was with all the bullish news. The next 2 days, the market hung there and kept dropping off and dropping off. And after that bullish news, you have to say, what is going to make Apple go up if the bullish news does not make it go up? So you have to respond to, how the market responds to the news. This is stuff that Jesse Livermore and many old guys like Bernard Baruch and, some of the other J.P. Morgan, they were always aware of how the market reacted to news, because if markets do not react to good news, they only have one way to go, and that's down. So keep that in mind, that when you see really good news, and the same thing is true, really bad news. Look at J.P. Morgan. It's had really bad news, and yet it's held the 786 retracement to the downside down at $33, a share. So, right now that looks like, it's actually held relatively well, given the fact that, it's gone through all this, turmoil that, is there. So this is, just common sense that we're trying to work on. Now, I need to cover the oil complex, and I think I'll start out with the gasoline futures, because we're very, very close to making a long-term 61% retracement. This would be equivalent to the number that we're looking at in the crude oil at $88 a barrel. Gasoline looks like it has about another 5 cents to go to the downside. It's made lower lows this week. It's still heading down, and we're looking at around 283 in the stock to see if we could do that. Now, I've had a request to put up the Apple stock, and I will do that here in just a second. Put it into Tiger TV, and we'll take a look at it, and we will show you what we're looking at. Yes, there it is. You'll see that at the C point here on Apple is where we had the correction That was the C point. Stopped right up at the 786. It was within, I believe, $2, actually $4 of the exact 786 retracement to the upside, and then it broke, well over $80. It broke $80 a share down to the, the 530 level, and then we've had a pretty good rally up. We made a higher high than the last few days so far. We're a little bit lower today, but this is 5 days up, so it's due for a correction. But it's one of those situations, if the market does not react to the news, it only has one way to go. Ed used to be when he was on the show for the commodities, he spoke about that several times. And those are, those of us that have been around these markets for a long time, that's one of the things that we try to learn, right away. And especially, being a technician, because I don't follow the fundamentals at all. My whole premise is that bar chart's going to tell me, whether it's going up or down. If there's more buyers, prices are going up, and if more sellers, prices are going down. It doesn't make any difference who's buying it, but somebody knows something more than I do. I just want to see what they're doing. And that's primarily what what we're looking at when we look at these things, is to try to take the technical picture, to keep it in a place where we can know how much we're going to risk, because that's the whole key to what we're looking at. So I have to get off my soapbox here. Anyway, we want to take a look now at the crude oil, because we're very, very, very close in crude. It'll only take a matter of a few hours or even a few minutes to reach that, $88 a barrel level. And that's going to be really critical, folks, because if we do not hold that $88 per barrel level in the crude oil, we are looking at a situation that's going to be very, very similar to 2007, and where we went from $140 down to $30 a barrel. We topped it in 2007 at $143 a barrel, and then we went down to the $33 per barrel level. So don't think that these things cannot go back to these levels, because they certainly can. It should have some support. We've had very few rallies, since early May, when many of these things topped. And it's been down, I think, about 16 out of the 17 days. So it's oversold by any stretch of the imagination. But we are coming into some serious support in gasoline and also in the crude oil. We have made major bear markets in the softs: coffee, cocoa, sugar, cotton. You can go through just about any of those. And the reason why it's important is because everybody, well, not everybody, but there was a general consensus of opinion 7 or 8 months ago that China was going to bail everybody out, that this was going to have a very soft landing in China, and it was going to bail out the commodities. It was going to make our GDP better and help Europe and everybody else. And China can't even help themselves. I mean, they're in trouble. They really are. They're having really massive difficulties. So they're there to protect themselves. They're not worried about the rest of the world, and they're certainly not in there buying commodities now. I mean, the cottons went from 212 to 73. They're certainly not buying cotton, and haven't bought a lot of copper. So they're not buying many grains. They're canceling orders for grains. So, they're not in the market for a lot of these things. So it's telling you that they're out there for self-preservation, and that's the name of the game of what we're looking at here. So we've got about 10 minutes, though. I think there's a break coming up. But what I want to do is I want to go over the Treasury bond the situation one more time, because I know we're in the TBT, and I don't know whether it's going to work or not. I think it's going to work. It's got everything there that I like to see, but we'll just give it a shot here after the break. 877-927-6648.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have a call from Denver, Colorado. Are you there, David?
I am. Good morning, Larry. How are you?
Good morning. What can I help you with?
Quick question. Do the feeder cattle and live cattle look to you, don't they look like a good sell, either here or a little bit? I'm actually short them right now, but like they've got quite a bit of downside to them.
Well, I think the regular cattle do, but feeder cattle scare me because of this, big wide-ranging bar that we had, 2-3 days ago. So I wouldn't touch the feeders. Okay. But the regular cattle look like they could still be in a downtrend, and feeders are relatively thin, David. So be careful there.
Right. Okay. Good. Okay. Second question is:
Yes.
Would you rather be long crude oil here, or would you rather sit still for the moment and look for a place to sell it on a retracement?
Well, I wouldn't mind buying it at 88, but I don't want to buy it here. You know,
Right.
I don't want to, because it could go down. You're sitting with a $2,000
Right.
loss. So if it gets to 88, I'll look at it, but not here.
Gotcha. Okay, great.
Okay. Thanks for calling in. We got a call from Jeff.
Thanks as always.
Hey, thank you, David, for calling in. I'm trying to get one more caller in before the break. I don't want to be rude. Jeff, are you there?
Yes, sir.
What can I do for you?
I was just wanting to see how you would play this futures or this the bond thing instead of the TBT. How you would do it on the futures contracts.
Okay, on the futures contract, I was watching it last night when we got up to the 148.14 level. That was the old high was 148.23. Notes had made a match the highs. The GBL in the 10-year bond, German bond, had made a high by one tick, and immediately started to sell off. And this was with this real bullish news for bonds. And so that's where, the 786 came in at 148.09. So, if you want to get in at the issue, I don't like to sell on weakness, but if we close below 147 in the June bond, that would tell me that the trend has, at least for the short term, is going to be going down.
And is that the 10-year note you're trading, or what is it?
No, I'm looking at the 30-year bond, the 30-year Treasury bond. That's where the big volume is. That's where most of the big players are, is in that 30-year bond. The ZB is the contract. It happens to be the June contract, and we're getting in the end of May, so we're going to be switching over to September pretty soon. But right now it's at 147.12, and if it gets below 147, then I would say that this is what we're looking at for the downside to come in. So we need to get it below 147 to turn the trend down, and all that means is it's broken below the 786 of any move that we've had over the last 6 or 7 weeks. So this would be the first time that it's done that. And the fact that it couldn't do it, with really, really bullish news is also a little suspect.
Okay. All right. Thank you so much.
Thank you for calling in, Jeff. One of my favorite experiences in my life happened in Springfield, Missouri, in 1962. My buddy and I were over there for a gun show, and we were buying Thompson submachine guns. I mean, you could buy stuff like that back in those days, and the Border Patrol was giving an auction, and we bought them for like $200 a piece, and we were bringing them back to Indiana from Missouri, and we got stopped by the Highway Patrol, and they looked in the trunk of the car, and they saw these 2 Thompson submachine guns, and here were 2 college kids, and they immediately took us to jail. And and it was not illegal what we were doing. They were just scared seeing the machine guns, and they let us go, and we got to take the guns home. And I sold mine, I think back in 1982 or something like that. I don't remember which year it was, and I sold it for several $1,000s. But my buddy still has that same gun. And it says it's worth over $5,000 or $6,000 now. Anyway, everybody have a wonderful weekend, and let's try to keep this market together until the 4th of June. May God bless.